All right, so here we are with the units of production method. Same information from before, same first paragraph. This one is adding a second paragraph, which is necessary for the units of production. And it says Papa Company expects to make 500,000 copies in the first 5 years of usage. The copier actually made 80,000, 125,000, 100,000, 115,000, and 90,000 in the first in the years 1, 2, 3, 4, and 5 respectively. That's necessary for units production because you need to know what they anticipate and then what they actually did with the units. So again, as you can tell, the journal entry for the first one, the TAC is still the same: equipment, copy machine 16,000, cash 16,000. Go through the year's operational entries, then we make it to the 1231 adjustment, where we have to do our depreciation. Now this one's units of production. Remember, this is the medium, I guess you would say, difficulty level. It has two steps that you do in order to calculate it. Step one is we need to find that rate. And so the equation for that would be TAC minus salvage value all over the total number of units expected to be produced, what we think we're going to at the beginning of its life. And that's going to give us the depreciation rate per unit. So our TAC is 16,000. Salvage value is 4,000. Again, that's also our depreciable base. So our depreciable base is 12,000. That's what we need to hit by the end. And the total number of units expected to be produced is 500,000 because it says that's what they expect. They estimate, they think they're going to have. So we'll replace that with 500,000 copies. And that will give us a depreciation rate of 0.024 cents per copy. So almost 2.5 cents per copy is how we're going to depreciate it. Now, you can put an asterisk beside that number if you want to. You can, highlight that number because once you calculate that number, you're done with it. You're going to use that each year from here on out. So step one is kind of a one and done kind of thing. Step two is that we're going to take that depreciation rate that we just found and multiply it by the actual number of units that were produced for that year. So we're going to have to do this on a yearly basis, and this will give us our depreciation expense for that year. All right, so let's start with obviously year one because that's what we're at. And if we look at it, it says that our year one we made 80,000 copies. So we'll take our depreciation rate, which is 0.024, multiply that by 80,000 copies, and that will give us a depreciation for this year of 1,920. So again, I'm going to make that table again. Year one, depreciation expense is going to be 1,920. Accumulated depreciation is going to be 1,920. And then my journal entry for the adjustment is going to be 1231, depreciation expense of 1920, and accumulated depreciation of 1920. That takes care of year one. Now let's go to year two. Year two, we're going to do the same thing. We're going to take the depreciation rate, which is 0.024, multiply it by how many actual copies we produced, which for year two is going to be 125,000. Multiply that out. That's going to give us a depreciation for this year of 3,000. So I'm going to add that to my table. Year two, 3,000, and then add the 3,000 to what was already there in accumulated depreciation, which is going to give me 4,920. Put that into my journal entry, 1231, depreciation expense of 3,000, and accumulated depreciation of 12,000. Of 3,000. Okay, let's go to year three. Same thing, same depreciation rate, almost 2.5 cents per copy times 100,000 copies. It's going to give me 2,400. So I'm going to put that in my table. Year three, 2,400. Accumulated depreciation I'm going to add it to the existing 4,920. That's going to give me 7,320. My journal entry is going to be the same, but this time it's going to be 2,400 for the debit and the credit. All right, let's go to year four. Same rate. This time we're going to multiply it by 115,000. That is going to give us a depreciation expense of 2,760. So again, year four, 2,760. Add the 2,760 to the 7,320 that's already in accumulated depreciation. That's going to give me 10,080. And then the journal entry, the adjusting journal entry, is going to be the same, except this time it's going to be 2,760 and 2,760 for the debits and credits. We're still expensing it through depreciation expense and then adding it to accumulated depreciation. All right, year five. Same thing, 0.024 per copy times the 90,000 copies. That will give me 2,160. Add that to my table. 2160, add that to our with the existing 10,080, that's going to give me 12,240. Now stop, because we're not going to do the journal entry right now because there's something wrong. We cannot have 12,240. Remember, because of our depreciable base is 12,000. So in the back of your mind, you have to kind of have that there to say, hey, I can't go over that. And if I were to do 12,240, I'm over that number. So what do I need to do? Well, I need to bring that 12,240 down to 12,000 because that's the max. So in order to do that, I need to take away 240. If I take away 240 from accumulated depreciation, then I have to take away 240 from the depreciation expense. That's the only way to get there. So that will give me 12,000, and therefore my depreciation expense will be 1920. That will give me my maximum depreciable base as my accumulated depreciation. The only way to do that is to hit 1920 in year 5 as my depreciation expense. So that's what I'm going to expense. That's what I'm going to put in my journal entry. So depreciation expense, 1920, and accumulated depreciation of 1920. If I were to go past 1920, then I would go past the 12,000 accumulated depreciation, which I can't do. So in the later years, be mindful, and that's another reason why I like that table, is because it gives me the visual to say, hey, I've gone past that depreciable base and I can't do that, so I need to pull it back a little bit, and then to the point where I can hit that depreciable base. So again, it's just an easy kind of thing to keep up with. That way you don't have to make the mistakes of depreciating too much. So hopefully that made sense. Again, this is the medium one. The next one we're going to do is the hard version, which is the declining balance method. But again, if you have any questions, please leave them in the comments below. Y'all have a good one.